Welcome to Entrepreneurial Edge. In today's video, we explore the greatest asset bubble of all time, the Souk Al-Manakh. Stay tuned. This is going to blow your mind. We're diving into the story of the Souk Al-Manakh, a stock market in Kuwait that went from boom to bust in the blink of an eye. This isn't just about money, it's a story about greed, risk, and the dangers of unchecked speculation. Back in the 1970s, Kuwait was rolling in oil money. The little Gulf nation had become an oil powerhouse, and its newfound wealth was transforming the country. But the official stock market, the Burra, was seen as a playground for the wealthy, leaving smaller investors out in the cold. This created a gap, a thirst for investment opportunities that the Burra couldn't quench. Little did anyone know that this thirst would soon be slaked by a market unlike any other, the Souk Al-Manakh. In 1978, the Souk Al-Manakh emerged, taking root in an unlikely place, a traditional Kuwaiti market. This wasn't your typical stock exchange with fancy trading floors and complex regulations. It was informal, accessible, and buzzing with activity. The Souk Al-Manakh quickly gained popularity, attracting everyday Kuwaitis eager to get in on the action. Unlike the Burra, with its stringent listing requirements, the Souk Al-Manakh was open to all. This accessibility was both its strength and its Achilles heel. The market's relaxed rules, while initially appealing, would soon pave the way for practices that made it a breeding ground for speculation. What started as an inclusive investment platform was about to transform into a high-stakes gamble. The Souk Al-Manakh operated on a system of trust, but that trust would be stretched to its breaking point. One of the most common practices was the use of post-dated checks. Investors would buy shares with checks dated in the future, essentially promising to pay later when, hopefully, their investments had yielded profits. This system, combined with the lack of oversight, fueled a speculative frenzy. Prices of shares, many of which were in companies that barely existed, skyrocketed. People were buying and selling on rumors, driven by the fear of missing out on the next big win. The Souk Al-Manakh was like a runaway train, its speed fueled by post-dated checks and a collective belief that the good times would never end. But as with all bubbles, this one was destined to burst. Dizzying heights, the Souk Al-Manakh reaches its peak. By 1982, the Souk Al-Manakh had reached its zenith. The market's value had soared to an astronomical $90 billion, dwarfing even the official Kuwait Stock Exchange. Investors, both local and international, were pouring their money into the market, convinced that they had stumbled upon a gold mine. Stories of overnight millionaires became commonplace, further fueling the speculative fire. People were quitting their jobs, mortgaging their homes, and borrowing heavily to get in on the action. The lines between investment and gambling had become blurred beyond recognition. But beneath the surface of this booming market, cracks were beginning to appear. The reliance on post-dated checks meant that the entire system was built on a foundation of debt and speculation. It was only a matter of time before the whole thing came crashing down. The bubble bursts. A bounced check, and the collapse begins. The beginning of the end started with a whisper, a rumor that a prominent investor was unable to cover his debts. Then, like a domino effect, one post-dated check bounced, then another and another. Panic set in as investors rushed to cash out, only to find that there were no buyers. The market froze, paralyzed by fear and uncertainty. The Souk Al-Manakh, once a symbol of prosperity and opportunity, had transformed into a nightmare. Fortunes were wiped out overnight, and the once bustling market fell silent. The collapse of the Souk Al-Manakh triggered a debt crisis that rippled through Kuwait's economy. The government, initially hesitant to intervene, was forced to step in to avert a complete financial meltdown. Picking up the pieces, Kuwait in the wake of the crash. The Kuwaiti government took drastic measures, closing the official stock exchange and establishing a special agency to handle the fallout from the Souk Al-Manakh collapse. The government eventually agreed to honor most of the post-dated checks, preventing a complete economic collapse but leaving the country with a hefty bill. The crash had a profound impact on Kuwait's economy, leading to a recession and shaking investor confidence. The situation was further exacerbated by external factors, including a global oil glut and Iraq's invasion of Kuwait in 1990. The Souk Al-Manakh debacle left a scar on Kuwait's financial landscape, a stark reminder of the dangers of unchecked speculation and the importance of regulation. Lessons from the sand. The enduring legacy of Souk Al-Manakh. The story of the Souk Al-Manakh is a cautionary tale, a stark reminder that even in the midst of plenty, the allure of quick riches can lead to disastrous consequences. It highlights the importance of robust financial regulations, transparency, and investor education. The unchecked use of post-dated checks, coupled with the lack of oversight, created a ticking time bomb. The Souk Al-Manakh serves as a powerful lesson about the need for risk management, not just for individual investors, but for entire financial systems. While the Souk Al-Manakh is long gone, its legacy endures, a stark reminder that the pursuit of wealth, if divorced from prudence and responsibility, can lead to devastating consequences. It's a lesson that remains as relevant today as it was in the scorching deserts of Kuwait in the 1980s. Thank you for watching Entrepreneurial Edge. If you enjoyed this video, please like and subscribe to our channel for more insightful content.